All right, this is June 10th, 2020. Futures trading is risky. Always seek professional advice before making any trading or investing decisions. This is my contact information. Do not hesitate to contact me, and please make sure to message me on social media, especially Twitter. Today, I wanted to cover a couple of little things where I've been getting questions from several traders about uh, what what I'm using, how I use it, and kind of explains certain things. So basically, I'm using Sierra charts for my market profile and volume profile and the regular charts, and I have Jigsaw for the tape, which is on this side here, with the power meters and also the dome, the depth of market. Today isn't the best day to really do these demonstrations, but I think it could be a good day just because it's a bit quieter due to FOMC. Also, the fact that we're going to be able to see some things that generally on a thicker day we would not see. So let's just cover this before. So basically, this is the ladder. This is my regular micro NQ that I'm trading here. This is Jigsaw. What I like about Jigsaw is I could hit the center button and it automatically centers my ladder. I could hit a hotkey, which I use to recenter all my domes. When you're trading on the dome, you don't have to look at every little detail and every little flash. And I just look at the fact that, okay, look at the three markets now. Are they trading mostly together? When they're going down, are they all going down together? Is there a correlation that we could understand from all of this? So it's 2:30 p.m. FOMC day, June 10th. Continuing with the dome here, the depth of market. I wanted to basically cover something here that came up on the NQ here. I mean, you could also see that I have YM, NQ, micros, MES, and then I have the tape with Jigsaw. So basically, once again, we're able to recenter all this, and see the order flow. Here you could basically erase what's going on. Obviously, this is FOMC and this is price action. So, I mean, price discovery, I'm sorry, where the market's going to be going all over the place looking for liquidity. And liquidity providers on the micros, it's really important to notice these guys. So I always take notes of these 150. So I'm just putting big cells. And then just want to see if there's anything here, the big bids or big numbers here. Nothing that's catching my eye on NQ. YM, I've been testing this to see how I could, correlate how. Look at the liquidity here in YM. I mean, it's not all that good. If you look at the micros, sorry, that was Nasdaq. Sorry, I was looking at the micros for the liquidity providers, and they're here. 10,152. What did they? What you see? 1050, 150. So very close. Same guys around. So I always put 147. So that dropped to 147. All right. So that's there. And we see here they're back. So 127. This is sort of still tradable now. So I'm not trading this again. It's FOMC and don't want to really mess around with that. You see on the micros ES here. We see them here and nothing else above. Yeah, 3230. And then we have these guys around here. So you see that's that previous note I had taken. I mean, these guys seem to always have levels and play around with levels. And I've had several traders who've mentioned that this is how prop firms to look. I mean, they want to play levels and they want to buy at certain levels. And I kind of looked to see how I could gain information from that. And the order flow kind of tells you as well. I mean, look, let's just reset buyers are here. This is again random spots we're looking at, but buyers are here and they're still strong, and then boom, you know, um, what happens with the micros is that you really need to rely on certain areas as inflection points. You see, look, sellers are getting a bit more dominant below 36. You see that? Boom, they just went down. So you see that 36 was a good zone, and sellers just took advantage. You could have shorted there, and then basically, and then here, boom, sellers got trapped. So 30 and 36. Let's just look at this, okay? So 30 sellers got trapped, 36. So my way of reading this is okay. Whoever it was in a trap, so these sellers are still in control. Below 30, sellers are in control. You see, that was a very important quick view of how this becomes like a blink at some point. You really see these very fast. You get to really understand how this works more and more time you spend in front of the screen and look at the sellers now. They're all over, and look at ES. The blocks are definitely there, and this is a short term power meter in the ES. So the short term is very on the sell side, and it's basically moving the midterm. Again, short term could be 15 to 30 seconds, and midterm could be the last 30 to 60 seconds. You could see that the tape has really become sellers, and we're getting some blocks. So I guess so that energy is kind of like stalling now. You see that energy stalling, and what was it? It went all the way down to 17. So if we had shorted that 30 in the NQ, we were down all the way to 17. That's a decent drop. It's still playable. It's still very tradable. That's why the liquidity is very important. And look at this. Uh, no important bid zones that I'm seeing on the book here. Let's see if you see they've disappeared again. So this is tricky where you want to see this liquidity. In ES we have this guy here. I'm just gonna put it here, 32.17. Yes, big cells. That's just a way for me to. All right, here 32.06. Once again, the dome is the way to basically give you execution here, seeing the order flow. Like I said, FOMC, it's a bit fast here, but this is not the best trading environment with order flow and dome, because you know that FOMC is it's all about liquidity, and it's all about news, and traders are retail traders shouldn't really look into being very active these days unless you have a decent account size and you're basically gambling a bit. But it does become tradable at some point. There are levels that you could rely on. But now NQ just made an again. It's always about the context, right? NQ just made an all-time new high today again, continuing to roar up. This slow volume node seems to be holding, so you don't want to be very aggressive on the short side. And again, I don't even listen to the FOMC news, so I don't know what they're saying and what they're talking about. So it could really affect uh, the order flow. So you don't want to basically bet against all that, right? I'm trying not to get distracted by the kids here, but this is my picture of depth of market that I had saved at some point, and I was explaining it to another trader, and just because he really wanted to see the basics and understand what it is. So we could basically play with this and edit around and take notes. So I'll try to see if I could do this for you guys. So basically, Jigsaw shows the profile. This is the volume profile. Okay, that's the volume profile. Gives you the edges, and then gives you the low volume area. Low how you call it? Value area is in gray, and these are the extremes of the value. So you can do the color coding as you wish, and then you have the depth of the bids here and the depth of the asks. Again, the coloring and all that, you could play with that. This is the current trades that occurred, so the footprint of what's going on and who's buying and where aggressive orders are coming in. I don't remember what date this was. I had captured this and we had discussed it with a trader. It's basically how does market go up, right? The market goes up if we get aggressive selling coming in, right? When you get aggressive selling, and my pen doesn't want to dry anymore. Yeah, so this is the volume profile here, the bids, the depth of the bids, and the depth of the asks. So these are limit orders, people who want to basically buy, sell, and these are limit orders on the bid side where people want to buy. So these guys are passive, right? So they're waiting for the market to come to them and they will initiate trade. So basically, being passive is just like I want to do business here, right? So most people, most traders pay a lot of attention to like big numbers in the bid or the asks, like the spoofing that could occur in these levels. Um, Honestly, if you see a big, um, if you see a big number come up in the ask depth or in the bid depth, it's just good to have a little note. That's what I just do. I just take notes to see if this guy here, we don't see big values, but I mean, let's say at this number, at this level, there was, I don't know, 500 or 300. So that's a very unusual amount, right? So most of these are 150, 130, not much more than 150, right? If you get a level where it's 300, 400, 500, I like to use those levels just as notes to see if, the guy is really interested to buy there, especially on the micros. On the micros, I've noticed that those levels kind of become areas where you want to spot reversals, or you want to see if the market's coming down to that certain level, and all of a sudden uh, it stalls there and then moves back up. So it basically meant that there was an important zone there. That's an inflection point for me to see. And sometimes it's not the exact level, it'll still go through it, I don't know, 4 or 5 points, 4 or 5 ticks, depending on the markets. The micro NQ could be a bit more volatile, but the ES and MES, it's generally 4 to 6 ticks, let's say. Again, these are observations, and this could really, you know, differ from environment to different contexts. I mean, if you have, if you have sellers all over the market and you're getting like major uh, sellers really hitting the bids and they're really coming in. So that's an expression that traders use as well. So hitting the bids means sellers are basically being very aggressive and basically jamming into all these limit orders, and all the big numbers are printing. So here, this 2870, we saw 394 trade at this level, right? So I mean, if you basically look at that, you know that sellers are present at that level, or present at that level, right? And another thing is when you see like an area where 2870, nothing traded there, you know? Again, this is a screenshot that I captured. If let's say we were going up like this and then all of a sudden we have these buyers that are exhausting, so we were at 110, 309, 11, and nothing trades, so that auction ends properly, and then you get sellers coming in 394. If I was long anywhere here, I'd start like I try to at least always keep one or two runners. But I mean, if you get sellers coming in here, don't wait for sellers to come all the way back to your level to, basically stop you out. Maybe sell a couple here and then keep one or two at these levels to stop you out, or, at least at your break even entry, worst case. Because what happens is, this could really become the top of this market, whatever time frame we're in. And look, sellers are being very aggressive here. So the market's here now, so it probably went up, and then we came back down, and we see all these sellers becoming more aggressive. I mean, let's say we were coming down 151, 149.32, 106.32, 156.98. You see, the sellers are being a bit more aggressive, and this is where you know I shouldn't have done this drawing here, because I think you guys can't see it. But if you see an imbalance here quickly on the footprint, it just, for me visually, it's like, okay, 11 by 99. I could see that people are selling. It could be serious sellers, and then that's where I'll have the blocks and the tape with jigsaw help me out. Obviously, now it's getting to a point where FOMC, and look how, unless my thing is disconnected here, but you know, I'm connected. The volatility has just dried up. It's moving a bit, but not too much. Let's see. Let's just reset all this just to give you guys an example of. You see, like, all right. So you see, seems like buyers are hitting. You know, they're a bit more aggressive at this area. I don't know where we are, honestly, depending on where we are. Okay, so that's the market profile. You see, and buyers, I said buyers were more aggressive, but today's maybe not the best day. And then I'm seeing blocks coming in here on the right side on ES, but the short term on ES looks bearish, but we're stuck. You know, this is not the best tape you can get when trading live on an FOMC day. I'm not trading here, so just wanted to demonstrate that. Same thing. So you want buyers to be more aggressive and sellers to be more aggressive depending on the market orders. So these are all market orders, the current trades that occurred. And what's good about Jigsaw is that this is my new setup. So I have the current trades here, my depth here, and normally I would have a footprint on the right side of the last, let's say, which I there's two options here, and I don't have the footprint here, and I didn't put the volume profile because I use Sierra Charts for my volume profile, and this is where, you know, look, I'm seeing quickly. You see, like buyers are a bit more aggressive. 10 1 10 1 9 27, so 127. If they can't hold that, that's for me, it's like, okay, they're not holding. Okay, and there, buyers were really aggressive on the 127 there. They just moved it. And okay, so I think connectivity is an issue here. So that's FOMC here. Single print 10.078. That's going to be an important inflection point, and it seems like we're not willing to trade back in their low volume node there. Coming back to my dome example here, um, so basically on Jigsaw, you're able to have different various columns, right? And let's say we're trading here and we have 11 that traded into the 47 limit orders here. So 11 got traded, 47 is the limit order. And let's say the market, we're still getting like decent amounts coming in here. But the same last two levels here, they're basically reloading, you know? That's where, like, okay, there's someone under the bid here. Someone is really willing to do business and to buy at this level. Is it someone that's absorbing to resell higher? You know what I mean? It all depends. So sometimes some traders will really like really rigidly go into the details of what's going on. Basically, that's right. Anything is going on, right? Anything could happen. If this guy is reloading, and you know there's nothing really major, big volume here on the asks. I mean, for me, it's like, okay, someone just wants to basically absorb, and this guy could be the same guy selling it higher, you know. So it doesn't mean like, okay, this is the level I want to quickly on your dome. You're gonna see that level, and you're gonna, okay, if I'm gonna buy this, I'm willing to not see aggressive selling below this, right? Again, this is quick. Once you start seeing the dome for 1 to 3 months, you'll see these patterns occur very quickly, and sometimes it's not even explainable. You can't even explain it, right? You're just used to seeing it, and let's say these guys are refilling and they're reloading here. Price goes up and then comes back, but like really has a hard time going through. You know that this level is an inflection point. That level is going to be very important for you for your next maybe 1 to 4 minutes, because you know that if we breach that level with aggressive selling, um, basically whatever occurred here let's say they were buying, right? Those guys are gonna bail out, and that will cause some kind of a temporary or even a good swing down. This is how markets work. Markets go up because there's supply and demand. There are areas that traders want to initiate trade. Um, when the market profile theorists talk about other time frame participants and short-term time participants. Look, we're all participants, we're all here. Yes, the big boys, the big institutions, they have much more money, they have much more you know uh, uh, financial capacity to move markets, definitely. So that's why you, as a trader, retail trader especially, you need to know when you have an edge and when you don't. And for me, the most important thing is having an edge with liquidity. If I'm trading the micros, I want to make sure there's liquidity in there, and I want to kind of see if those liquidity providers have their levels, and those levels, are they giving me an edge in my trading? You know what I mean? So I went and got my ES here, because ES, depth of market, is the one that I keep my regular profile and the footprint. Now, since I got disconnected and all that, so the profile isn't giving me the full profile of the day, because the profile of the day looks like this. Again, like I said, I mentioned it previously, I use zero charts for the profile, and look at how the market's been really all over the place now due to FOMC. So it's a good thing to notice that any investing strategy will be very trading strategy will be very volatile when we have fundamental news, and I don't even know what they're saying. Are they hiking rates or not? I'll look at that after, but I don't really trade on the news. But it's good to know that this is a day where the news is going to affect the market's behavior a lot. So don't rely on everything, or even on order flow, mostly on these FOMC days, because they become very, very wicked, and they could be out of the ordinary. And try not to, really trade on low liquidity days. And on ES here, just to come back to what I was mentioning, here on my ES dome, I'm able to just hit this clear totals line, and it clears my trades. You see, it's clearing my totals, and it clears also this here. So basically, it's a way for me to notice that, you know, if I want new information, I'm seeing blocks coming in. Okay, I see that sellers are short term and midterm are in control with my tape here. Uh, are we able to sustain that, right? That's pretty much what I want to know. And you see, if we're able to see this here, 3188 had what, 124. So when we come back to 3188, will all these 124 limit orders that are waiting to be executed, will they fill? Same thing. That's how you want to. You're not constantly saying, okay, let me see if the 124 is going to fill, but it's all about, okay, I'm seeing sellers being more aggressive or buyers being more aggressive, and that's all about the level that you want to look at. And at this moment, ES is basically sitting right in the middle of a high volume node. So if we just do this like this here, I think it's better. So this is our profile. Forget all this here, just look at the dome. So I'm going to see 3192. 3192, low volume area. And so far, 3192, low volume area is holding. And we're getting a bounce off of it. You see, like the sellers are not getting the job done very quickly here. So that 3192 is an inflection point for me. Are we going to be able to get, we're not getting decent selling off of it so far. And 3192, you see, that 3192 could be an area where you want to add some micros long, and again, context is always what's important. I think I just reset my dome here. All right, so here again, lagging information here, lagging with the So I'm not trading this. It's just the connectivity with my broker has been slow. Maybe it's because it's FOMC. I don't know. So if you're using the volume profile on Jigsaw, you'll have color coding to show you the VPOC. You can also color code the volume weighted average price. VPOC and volume weighted average price is not something I really look a lot in my trading. I just have it on the profile here, and on the VPOC is right here. It's just basically it's there, but I mean, the VPOC, how do I really rely on that? No, because there's a lot of volume here. There's a lot of volume here too. So will it bounce off this one? If it doesn't bounce off that, will it, I haven't really noticed a good filter for myself when it comes to VWAP and VPOC. I basically use the time point of control. As you can see, this is a very important prominent time point control. It's got 1, 2, 3, 4, 5, 6, 7, 8. What is it, like almost 10 wide? So that 1067 ish, right? That's basically going to be an important level going forward. That's how I see that, and I will generally put that in blue to emphasize the importance of that area for me going forward. Coming back to the dome here, I just wanted to emphasize that um, these limit orders basically they're always constantly changing, right? Don't try to put a lot of importance to each level or each number. I just highlighted these here. You can play around with Jigsaw's levels here, and you're basically able to, put that in different various ways. You can change the appearances, colors of all that. On the volume profile, you can have the various coloring, and you can have them on the right, on the left, and the power meters. You can also play around with these power meters and the depth. That's why Jigsaw is really pretty customizable for whatever way you can put shortcuts. The way I use my shortcuts is I just hit F1 to kind of recenter all my domes. And some traders ask me like, how do you trade this? How come you actually look at everything here? No, not every detail is important. Again, it's all about the context and the level, which areas we're trading. If are we close to an edge? Let's say the market didn't go up here, okay, and we were at this edge around 1067. You want to see on your dome, are we holding it? Are we still getting buyers, reloading those areas? And basically, this becomes almost like a blink. I always say that, but it's something you really need to spend time and see it. Sometimes it's a feeling. It's like, okay, it's not going down. I'm not seeing aggressive sellers. Let's see if we could, gradually scale into a position. Looking at this 3190, I've noticed that sellers are hitting the bids a bit more aggressively here. And look at this, look at that. 99, 113. You see the sellers were very aggressive just after getting into that 3190, and look at this, look at the tape. Wow, the tape was red all over. So that was a really easy trade to go get on ES, just based on momentum. Really the sellers were all over it. And we were getting, look at this, 400, 300, 104, decent size on ES now. Quickly, if we just go to my micros here, I want to see if my micros, yep, you see the liquidity guys are back. So these guys are around 56. Again, there's a way to erase all these after, but 56, what is this? It's my node. And then there was a low volume node before, and then I just want to see on the sell side, yep, they're back. So 81. So now we've got a decent market to go and trade with nice volatility and nice volume. You always want to make sure that uh, the volume and the liquidity is there when you're trading. So basically, a trader had asked me, why is it good to have the dome? And the main reason why I really think dome, at least seeing these things, is important. If I can put my chart in front of it, look where we are. On this 20-second chart, we're at this level. And on our dome, we're seeing that this level, we have a fight, and the buyers are hitting the, they're really hitting the offers here, and now it's kind of fading as my data lags here with my jigsaw for some reason. It's been a weird day with this. I don't know why. It's nothing to do with internet. It's just jigsaw that's been lagging here. Okay, so basically, on a candle you'll see this big move up, right? But after that, are you seeing decent selling coming in? And if you look at it on a chart here, the candle doesn't give you enough information. Yes, price action guys, you're gonna say, oh look, we've got decent buying coming in, but I mean, are you buying going up with, you know, low volume? You see all these nuances on the dome, and now we're just stuck in this range, which obviously you can see on the chart, but you could see that, the last, you don't even need a chart. You can just put the chart away and you'll see it on the dome. And also, what I like is always mixing the dome with the tape. I have the tape here on NQ, and now at the moment I could see that they're hitting the bids, and it's still pretty balanced. Buyers are willing to buy lower prices, and nothing. It's still a very balanced market here. And now all of a sudden sellers come in, right? Look at that, 1712. Let's see if the sellers, oh, here come the sellers. Here come the sellers. And there you go. You see, if you're able to see this quickly, you'll react faster instead of looking for, confirmation on a candle or something, a lot of candlesticks. So you just broke this, we just broke that pivot here, and once we broke that pivot, are we getting selling that's, are we getting decent selling? You can reset. Now you want to see if the selling continues here. This is, we've got a decent momentum, but nope, buyers are around. So you want to be nimble, and you know sellers are still attacking this zone. So would you like to buy this? And now here we go. Obviously, that was a very huge burst. I'm not trading in the context of where it was just a basic period of the chart there. But I mean, if you were in the context, if you had shorted at the highs here, you would have taken some profits basically, and you'll keep a runner or two. And this is my trading style. I don't like to, overcomplicate it. Market goes up and down in rotations, and you need to basically know what kind of context we have. Here we have a context where basically market is making all-time new highs, but in the last 3 auctions, it's done rotations from highs to lows, and it's been coming back to this 1066 time point of control to retest it, kind of, and this confirms that it's a rotational market. You know what I mean? So I hope this helps. I'm just gonna let the dome run here for another minute for you guys to see the action. FOMC, 10th of June 2020. Hope this helped. If you have any questions, let me know. And again, we could emphasize details of all this in another video at some point. But I felt like this was a good day to really go over this